For the past few months, crypto has been relatively stagnant. Sure, there are occasional fluctuations, but you might be wondering what's happening in the crypto world. There were times when a small tweet from Elon Musk could skyrocket the markets, or when a speculation on Twitter could cause 10 to 15% gain or loss in asset value. If you have such questions, I welcome you to Business and Finance Plus. I'm your host, Alex. Let's dive in. As you might have heard, if a common person misses a boat, they miss it. But when the rich miss it, they call it back. Just keep that in mind and we'll talk about it at the end. If you observe closely, multinational corporations actually hold more power in countries and regions than governments. Governments can handle administrative work and stage elections to avoid being called out, but that's the reality. Now, if you think so much is happening in the crypto space with major financial institutions filing for Bitcoin spot ETF with huge approval rates like 99.8% for BlackRock, you would expect the markets to react, right? However, they seem to be stagnant.
This is one of the reasons why I'm focused on the whole idea of blockchain for securities. I look forward to the day when we could tokenize stocks and bonds, that every stock and every bond we could identify immediately who is the beneficial owner, and this is why we're working on it, and every beneficial owner from an individual to an institution have the ability to vote, to democratize every single vote. And that's where we want to take this, and we're leading that effort.
Ripple has beaten the SEC on the secondary market sales decision, stating it is not a security. And it did pump significantly, but it couldn't sustain the price of 90 cents or 80 cents or even 70 cents and lost most of the gains. So what's causing the markets not to rally anymore despite all this good news? The answer lies in the fact that crypto on-ramps and off-ramps were shut down a few months ago. How, you ask? Crypto-friendly banks in the US such as Silicon Valley Bank and Signature Bank were targeted, meaning no new money is flowing into the crypto space. This explains why every rally in the market gets sold off and the total market cap remains stagnant. Now, do you remember at the start of the video when I talked about rich missing the boat? Let's imagine all the institutions joining and investing in crypto markets with the trillions they have. We have two scenarios. Scenario one, they come and buy, skyrocketing the prices of all crypto assets, and we sell them our bags. Then they stand there like idiots without buyers, while we wait with cash in hand to buy at lower prices. What a dream. So, just putting that out of the way, we have actually other two scenarios. So, they either bore you out of the market or they scare you out of it. In both scenarios, they want you to sell cheap. My personal opinion on the matter, which is not a financial advice in any shape or form, is that they have already tried to scare you out of the market with all the recent FUD, with SEC going after everyone, and they couldn't succeed. Now it's time to bore you out. Bottom line is, whatever you do, don't sell cheap. Now ask yourself this: if crypto on and off ramps were still available when the BlackRock filed for a spot Bitcoin ETF, wouldn't that have skyrocketed the Bitcoin price? Yet it didn't. And if you connect the dots, you'll definitely question the timing of all the events. What a coincidence. What needs to happen for prices to remain stagnant while BlackRock and other big money institutions file for an ETF? I don't know. You tell me. Go into the comments section and give me your thoughts. Make some noise for the YouTube algorithm by liking, subscribing, and sharing this video with your fellow adventurers. I'll see you next time.